All right, good evening, everybody. It is November 10th, 2022, a Thursday. A lot to talk about. We have been MIA on the stream for a couple days. It's been raining pretty crazy here in Miami over the past couple days, but thankfully the hurricane did miss us. So we're gonna be talking about a couple things tonight. Big rip rally day on Wall Street. S&P 500, the NASDAQ, and the Dow Jones Industrial Average all up over 4% on the day. We did get some interesting inflation data out. Obviously, the CPI numbers is the main event for today, this Thursday. I do want to say, tomorrow, November 11th, 2022, the stock market will be closed. I mean the bond market, will be closed. Tomorrow is Veterans Day. So the stock market is open, but the fixed income market, bond market, will be closed. So I want to start off the stream by thanking all of our veterans. We appreciate it here at the Walks from Wall Street channel. We support our vets here. So thank you to anybody in the chat who has served in the United States Armed Forces. We appreciate it very, very much. And I hope you have a great day tomorrow. So we're going to be talking about inflation data. We're also going to be talking about the correlation between that 10-year U.S. Treasury yield declining. Now, we had an absolutely breathtaking move in the bond market. If you look at that 10-year U.S. Treasury yield, think back 2 weeks ago, we were trading at 4.332%. Now we've came all the way down to 3.811%. Just a massive move in that 10-year U.S. Treasury yield. 30-year fixed rate mortgage is still elevated at 7.32%, but if I had to bet, I think that's going to come down a little bit as the weeks progress. Taking a look at the dollar, the Dixie's at 108, okay? And I think this has been fueling this big stock market rally that we've been having, because if you think about the mechanics here, and if you think back to earnings season, you know, we covered Apple specifically, and Tim Cook came on the earnings call and said that due to a strong US dollar or currency fluctuations that actually accounted for about a 600 basis point hit to revenues. So they did grow revenues about 8% year over year, but Tim Cook said that would have been double-digit revenue growth if it wasn't for a strong dollar. So the dollar's coming down, I think, fueling this stock market rally. Dixie's at 108. I think the high in the Dixie was set at 114. I think that was back September 28th. Now, notice the correlation here. Last thing I'll say before we say what's up, everybody in the chat. Now, go back to September 28th, okay? And the S&P 500 was trading at 39.57. Okay, it was about maybe 100 points off the bottom. And that is the exact day that the dollar topped at 114. It's also the exact, I think maybe a day or two after that 10-year U.S. Treasury yield started to come down. And ever since then, we've had a pretty strong stock market rally. So we're going to talk about that correlation. We're going to do a deep dive into the CPI report. And then we are going to talk about a major home builder, ticker symbol DHI, DR Horton. They are the largest home builder. Be on our website. Good to be back. Let's see who we have in the chat tonight. I see Otto is here. Good to see you. Vinny Castellano. Paul is here. Lemonade says happy Thursday. Good to see you. Tom Barry. Welcome, Tom. Happy Thursday to you, my friend. I see Vinny Castellano. Maria Castellano is in the chat. We have Lemonade. We have Dutchman. This is Tom. Good evening. Thank you so much. British Gray is here from Tampa, Florida. Always a pleasure. Rafed says good evening, Tom, and everybody in the chat. Thank you so much. Mimi is here. Says, hey, Tom, it's feeling like a Friday. Yeah, it really is. I mean, I think the vast majority of people have off tomorrow. So tomorrow is Veterans Day. This is a quick look at the Brickell City Center here. Now, I believe the post office is closed tomorrow. The bond market, the fixed income market is also closed tomorrow, but the stock market is going to be open as normal. It will resume trading to finish off the week strong. Hopefully, Jeff, this here's this crazy day at Meta yesterday. Yeah, so Meta had, I think, 11,000 employees, unfortunately, lose their jobs, which is never good. We never really want to see that. Hopefully nobody that we know or that you guys know in the chat has been impacted by those layoffs. Now, it's strange because it's not just Meta, right? I think Amazon came out, they didn't announce layoffs, but one of the things that they said is that they are going to be implementing a hiring freeze. I think we're going to see a lot of that stuff coming down the pike. Top G is here, says, yo, Tom, good to see you, Top G. Nisha Brooks says, hey, Tom, good to see you, Nisha. Always a pleasure. We have our good mod, Sunshine After Rain, and Amar is here. Says, glad the storm didn't hit you. Yeah, I mean, I went all the way to Publix yesterday in the pouring rain because I thought we were going to get this Category 1 Hurricane Nicole. But thank God we didn't get any of it, which was great. Unfortunately, I think there was some minor damage maybe in Fort Lauderdale, but nothing really to write home about. You know, especially comparing this hurricane to Hurricane Ian, which absolutely devastated parts of Fort Myers, Florida, southern Tampa, Florida. So I think we lucked out. Now, correct me if I'm wrong, but I think this is the latest hurricane that has ever hit Florida, I think in over 50 years. So really wild there. Tracy Sill says, hey, Tom in chat. Billy says, FTX about to be the next Lehman Brothers with the scam freed. Yeah, I mean, Billy, and I think this goes back to, and I think it's going to be an important topic to talk about tonight. But, you know, I've been saying for the longest time on the stream that I would avoid all of these altcoins, right? Because the altcoins are essentially, in my opinion, and I always get a lot of blowback when I say this, especially in my email box. But in my opinion, a lot of these alternative coins or altcoins are just simply unlicensed and unregistered securities. Because if you think about from the FTX standpoint, right? The FTX was a major cryptocurrency exchange. All right, so the biggest, I wouldn't say threat, I would say worry. Okay, let's use that word. I would say the biggest worry right now as it relates to FTX is a lot of customers that had Bitcoin on the exchange, maybe they had Ethereum on the exchange, or just any type of cryptocurrency that they bought and sold on that exchange. They're probably not going to get it back. All right, I mean, that's just my guess. Now, I don't really want to sound like an alarmist, but if it were me and if I had any type of cryptocurrency or money on FTX, I would just totally forget about it and I would just write it off as a loss. Now, things could turn around, but I wouldn't be betting on it. And this is sort of why I always say, look, if you're gonna hold, I would say you're even buy Bitcoin, right? I think a lot of people do it for the wrong reasons. They want to buy it because it's, you know, maybe it's going up in price, or maybe you got a tip from your buddy or something like that. And a lot of those people don't really understand the value propositions, because the value proposition of Bitcoin is so you could have unconfiscatable money, right? Which means you can buy Bitcoin, transfer it to a hardware wallet, to cold storage, and you could memorize your private keys and nobody could ever get access to it. But if you leave it on the exchange, okay, if you leave your Bitcoin or any cryptocurrency for that matter on an exchange, if the exchange gets hacked, or in this case, if it goes under, if it goes bankrupt, it's gone, right? So, yeah, and not your keys, not your Bitcoin, so to speak. But more specifically, as it relates to FTX, right? Anytime you have an exchange, and Binance, I'm not sure if anybody's familiar with this, but it's also a very notable and popular exchange, right? But the biggest issue that I have with a lot of these exchanges is that they're issuing their own token to essentially fund their business, which is essentially just like creating an unregistered and unlicensed security and soliciting it to customers, which in my view it shouldn't fly. But I think Gary Gensler and the SEC is going to be all over this now because I think people lost so much money to the tune of billions and billions of dollars. Now, last thing I'll say about the FTX scheme is that the SEC, or the Securities Exchange Commission, is always late to the party. Okay, they wait until a cataclysmic event happens and wait for millions of people to lose all their money in order to step in and regulate, right? So it's very reactive organization. Jay or Jay Victor says, how are you? I'm doing good, how are you? Sally is here, always a pleasure to see you, Sally. Daryl Jank is here, says hello Tom from Chicago, Illinois. Ladder Daddy 69, welcome. Dan Zhang says, Tom, have you seen the news that FTX might be halting trading in a few days? Yeah, well, I think the exchange is going to, I think it's just going to go under altogether, right? Benista Boy is here, welcome. So this is one of my favorite views. We are streaming live from downtown Brickell tonight. Michelle K says, hey Tom, great to see you, and everybody, welcome, welcome. WW says, first stream since the midterm elections. Yeah, that's true. I also wanted to talk about that. We got a lot to talk about tonight. Julie M says, hope there won't be anyone so bad off. Yeah, I mean, it's true. I mean, you know, that's the biggest issue, and I'll say it again, with these unlicensed exchanges, the way a lot of these altcoins fund their projects, right? Because essentially these are just all software companies, right? But the way that they fund these projects is by issuing these tokens, in which case that raises money so they could, you know, hire employees, build the startup. And just because they're not calling them securities doesn't mean that they're not securities. And this leads to a lot of nefarious activity. And I don't want to accuse anybody of anything. I know it's still very early, but I'll just say this. I don't get involved in the altcoin stuff. I think there's going to be drastic changes to that environment. I think the SEC is going to be forced to step in here, and yeah, I'll just say that. Wow, top G says some school district in Toronto lost $95 million in the pension fund with FTX. Yeah, I mean, that's another issue, right? And I think we covered this on a live stream before. We talked about pension funds specifically over the last decade. They have been investing in increasingly risky investments, right? Now, you might ask yourself, well, why are pension funds being forced, I shouldn't say forced, but I guess lack of a better word, being forced to take risk in riskier investments, such as private equity and venture capital, all this stuff. And it's because a lot of pension systems are underfunded, right? So they do not have enough capital to meet their liabilities, so they try to generate an extreme amount of alpha. But in order to generate that high return or alpha, you have to take a lot of risk. And I think this just has to do with, you know, we're coming off a decade of artificially low interest rates. And when you have artificially low interest rates and money printing, it literally forces investors to search for yield in the marketplace, right? So if you're leaving your money in a bank or you're buying a bond, over the past decade, the vast majority of debt is negative yielding around the world. Well, that's probably not going to generate the alpha you need to cover your liabilities as the pension fund. So they speculate in growth stocks, they speculate in venture capital, private equity, in this case, cryptocurrencies and things like that. So The Federal Reserve is raising interest rates. Last week, we got a 75 basis point rate hike from Fed Chairman Jerome Powell. But not just that, central banks globally, I think the Bank of England also did a 75 basis point rate hike. However, one of the topics we're going to be talking about tonight is the CPI report. Okay, so the Consumer Price Index came out today. Now, in my opinion, it wasn't that good of a report. Inflation is still unacceptable, but it's more along the lines of the trajectory of the inflation trend. So, June CPI, if we think all the way back to when inflation, I guess, quote unquote peaked, right? Quote unquote peaked, that would be in June. So the CPI, or the headline, which includes very volatile food and energy, was around 9%. If you fast forward to July, we got an 8.5% reading in the CPI. Okay, August, 8.2. September, we matched that number with 8.2. September, 5. August, 8.2. September, 8.2. And today, we just got the October CPI report out, coming in at 7.7%. So we're starting to see deceleration here. And I think that's going to prompt the Federal Reserve to do a 50 basis point rate hike at their next meeting, which should be the first week in December. Now, I'm not calling a Fed pivot. I just think that they're probably going to raise rates in increments of maybe 50 basis points as opposed to 75, because we did get a better than expected CPI report. Hey, NJB, good to see you, my friend. Yeah, I heard about that. So Tom Brady allegedly invested like $850 million into this FTX thing. Insane. Hey, we got the one and only fellow New Yorker here, Barefoot Vlogger. What's up, man? Says, hey, Tom, great day in the market. Glad you made it through. Nicole, okay? Have a great night. Yeah, I mean, we lucked out. I was a little nervous, not gonna lie. I actually, so I walked to Publix to get some stuff for the hurricane, but it totally missed me in North Miami Beach, which was good. I mean, I guess I have, tons of canned food and all that stuff. It's my first year in Florida, so not really used to the hurricanes, but yeah, thank God it missed us, my friend. Hope you're well. Explode V2 says, hello, do you know places in Midtown where I could use their office space to work for free at an affordable price? To work for free? I don't know about that. I mean, WeWork, which is right here. So this is the office I work out of. It's the KPMG building. I think a daily pass for WeWork is like $20. But if you want to go on like a monthly subscription where you could use any WeWork office in the world 24/7, 365, I think it's $299, something like that. I think I pay like $300, which is a good deal. I think this is to Tom Brady retire. I think he has to go back to work now. So really quick about the Tom Brady thing. So on my Twitter, I always like to watch when I cross. These Miami drivers are horrible. Also, the New Yorkers are horrible too. But a lot of New Yorkers are in Florida, which probably explains why the horrible driving. So I posted on my Twitter, if you guys want to follow me, at Walks Wall Street. Now, I never knew this because I don't really watch TV, but supposedly during the Super Bowl, Tom Brady came out with a commercial promoting, I guess, FTX, right, the cryptocurrency exchange. And I never saw the commercial before until yesterday. I think somebody may have retweeted it. Anyway, and it was so reminiscent of this one quote that's one of my favorite quotes by arguably one of the best mutual fund managers on the planet, Peter Lynch. So Peter Lynch ran the Fidelity Magellan Fund and outperformed its benchmark, the S&P 500, every single year that he was a manager. And one of the, I guess, most famous quotes out of the book One Up on Wall Street by Peter Lynch goes something like this. He says that people will go to the library, they'll spend 2 weeks doing extensive research to buy electronics, to buy a microwave oven, But people are willing to drop $10,000, $100,000 on a stock pick just because. And this reminded me so much of the Tom Brady FTX commercial, because the commercial was essentially this. This is Lucid Motors here, by the way. I'll give you guys a quick look at that. So the commercial was essentially this. Tom Brady and his wife, and nothing against Tom Brady, by the way. I think he's a unbelievable athlete, incredibly freaking successful, just a rock star guy. But I mean, celebrities aren't investors, right? For the most part. Oh, yikes. So essentially the commercial, long story short, was Tom Brady calling all his buddies saying, look, you got to get involved in cryptocurrency. You got to get involved in FTX. You got to buy the FTX token. And it reminded me of that Peter Lynch quote. In this case, it wasn't, you hearing a stock tip on the bus. It was everybody on the Super Bowl hearing cryptocurrency tips from celebrities. So definitely reminded me of that quote. Anyway. Susanna H says, hey Tom and everybody, glad to see you're back. We missed your great walk and talk. Yeah, I mean, I think it's been 3 days now. We could have probably streamed last night, but I don't know. I was watching the weather and they said that the hurricane may hit Miami-Dade County, and I live in northern Miami-Dade, and I just didn't want to get stuck. But we just had 2 days of rain. That's about it. I mean, nothing. I mean, I've been really, really lucky so far. Bands. Yeah, so let's talk. All the results are in, if you could believe that. But so the midterm elections, I think, in terms of the House, Republicans so far hold about 209 seats. Democrats hold about 189. And in the Senate, I think Democrats have about 48 to Republicans 49. So definitely not the red wave that a lot of people were expecting. And this sort of reminds me of the old saying on Wall Street. Whenever there's consensus in something, that's usually when alpha diminishes. And just in layman's terms, usually when everybody is on the same side of the trade, the absolute opposite things tends to happen. And that seems it's exactly what happened here. Now, the good news is, regardless of whoever won, if you wanted somebody to win or not, I don't really think that matters. The good news as it relates to the financial markets is usually after midterms, right? Markets are usually at ease. And performance 12 months after midterm elections, 90% of the time, are usually positive. So if you think about, I think, when are we getting the last election result in? Does anybody know? I think we're waiting on Arizona and Nevada. Does anybody know when those results are supposed to be in? Maybe anybody in the chat? Yeah, Tariq is sort of like celebrities on everything such as COVID, climate change, ozone layer. Hey, Brad's brain is here. Good to see you, Brad. Buy the book is here. Says, hey, Tom and everybody, welcome. Okay, Deep Coders is Saturday. Yeah, so we should have all the results in Saturday, but I think for now, Steve CR says next week for Arizona, 500K votes left to count. Kristen S is Nevada, 86%, I believe. Okay. Yeah, so I mean, the good news, regardless of who won and who lost, the good news is that about 90% of the time, if you fast forward 12 months from the conclusion of midterms, the markets tend to be higher, almost about 90% of the time, 12 months after midterms. And I think I would say one of the tailwinds to this, number one, weaker US dollar, which we talked about at the beginning of the live stream. The Dixie right now, which is the indice that tracks the relative strength of the dollar versus a basket of global currencies, we're trading at about 108 right now. So if you go to tradingview.com, and I always say this website because it's my preferred charting software, mainly because it's free. I'm a big believer in, free software tools, free education. So if you have TradingView, a TradingView account, put a 50-day moving average on the Dixie and notice where we're trading at right now. I mean, we've absolutely obliterated and cut through the 50-day moving average for the first time since January 12th, okay? So since the beginning of the year, the Dixie has not cut below its 50-day moving average. So this tells me, it may not be a long-term top in the US dollar, but it may be at least a short-term top in the dollar, which is fueling this equity rally, okay? So the Dixie was trading at 114 on September 28th. So that was the top. Let's just call it the short-term top. So we traded from 114 on the Dixie all the way down to 108. Now, notice something interesting here. Take a look at the S&P 500 on that exact day. Okay, so if you go all the way back to September 28th, pull up a ticker symbol SPX, which is the ticker for the S&P 500. We were trading at 39.56. All right, we're trading materially higher now. And I think it's because we have a combination of factors. And I always say this is what I watch. So I'll have the Dixie on one monitor here. I don't really track this all day, but relatively. Usually in this market environment, when you have the dollar weaker, when you have the 10-year US Treasury yield coming down, which means bonds are getting bought up, and usually when you have crude oil stable and the VIX lower, that's what fuels this stock market rally, and that's exactly what we've had. So we are now back above the 50-day on the S&P 500. Dow Jones Industrial Average is above its 200-day and its 50-day. And the NASDAQ is lagging. The NASDAQ is just now getting back above its 50-day moving average. And I think it's kind of strange because usually when markets bottom, you have the NASDAQ leading. But it seems like in this cycle, the Dow or the Dow 30 has been leading. And I think what's different in this cycle, is this a one-way? I think this is a one-way. It's trying to turn here. What's different in this cycle is the Fed is raising rates, right? And usually these high beta, high growth tech stocks do not perform well generally in an interest rate rising environment. So we'll keep an eye on that, but I just wanted to bring that to your attention because we have a dollar lower, 10-year US Treasury yield coming down. Right now it is trading at 3.811%. And the VIX is crashing, falling off a cliff, trading at 23 from 34 on October 13th. So you start to see the market mechanics here of how the dollar plays into equity prices generally. Now this is a generalization. It's not an exact science, but you sort of see the correlations here. VL123 says, I would love to move to Miami. Come on down, more than welcome. Dan Zenix is pretty insane that NASDAQ was up 7.5%. Yeah, crazy moves today on Wall Street. Now, I think it's a combination of things. Obviously, we got a better than expected CPI report. But I think just aside from the good CPI report, if you look at, and I posted a lot of charts on Twitter, if you look at a lot of these individual names across the board, like Amazon, Alphabet, even some of the smaller cap tech stocks, the ones that have been really getting hammered, like Zoom, like Twilio, CrowdStrike, Palo Alto Networks, these are all egregiously extended to the downside from their 50 and 200-day moving averages. So I think the catalyst was that better than expected inflation report on the back of midterms, all this political nonsense ending, and a lot of fund managers being on the short side of this market and everybody just trying to cover at the same time. Hey, Layla is here. Good to see you. Welcome, welcome. Derek says, hey everybody, how is Miami, Florida? It's a beautiful night. I will say this, here's what I've noticed. Whenever we have storms passing in Miami, usually the day after the storm is by far the best weather. And I think it's because it sucks a lot of the humidity out of the air. It's not that humid today in Miami, surprisingly. Adora Henderson says, I'm looking to buy in Brickell. I visit often. Wow, congratulations. It's an awesome place. Now, Brickell is extremely, extremely expensive, but it's absolutely beautiful here. Now, if I had to say one thing, like the biggest compliment about Brickell specifically and Mary Brickell Village, it would be the cleanliness of the roads. I've never seen anything like this in my life. You know, not to pick on a city like New York, in general, right? Compared to cities in general, it's like you could eat off the floor. I don't know how they do it. Now, obviously, it's a lot less foot traffic than a place like New York City, but this is a very, very clean city here, especially in this particular part of Miami, Brickell. And the roads are freshly paved. Everything's very clean. I don't know how they do it. Adora says, yeah, I live in New York City. Brickell is like a mini Manhattan. Yeah, it seems that way. You know, and Brickell is also very good with public transportation. I think the further outside of Brickell you get, the transportation is a little bit lacking. Sometimes the bus could take quite some time to get here, let's just say that. Allison Williams says, I love your videos and commentary from the 305. I wish the 242 was as clean, says Allison Williams. Thank you so much, Allison Williams. SJ says most of Miami is this way, also Coral Gables. So is Coral Gables where the University of Miami is, I believe? I think I've been to University of Miami a couple times. I need to get back there. SJ says Doral and Sunny Isles Beach. So I live very, very close to Sunny Isles. I would say one should go over is it called the Intercoastal there? Or just Causeway? That's sort of the area where I reside. Now, I think Sunny Isles Beach is considered the Miami's Billionaires Row. So if you guys are familiar with our New York live streams and podcasts, whatever you want to call it, 57th Street Billionaires Row is our New York City's Billionaires Row. But I think the unofficial name of Miami, Florida's, is right there in Sunny Isles Beach. You know, they have the Bentley Tower going up. They also have the Porsche Design Tower, which I think has been complete for a while now. Really, really nice buildings over there. Dan Russell, what's up, man? Says, hey, Tom, have you been to any sports games yet in Miami? I haven't. I got to get to some. Maybe I'll have to go to a Miami Dolphins game, something like that. Now, I know that David Beckham is sponsoring some sort of soccer team here. I think Miami FC, I'll probably have to get to that. Nicholas Sturr says, hey Tom, tomorrow is Veterans Day. Do you have any veterans in the family? Yeah, I do. My dad was a Navy nuke, USS Carl Vinson CVN 70. But yeah, so tomorrow stock market's going to be open, but the bond market, the debt market will be closed. And once again, as we acknowledged at the beginning of the stream, thank you to all of our veterans, especially those who we may have here in the chat or who are watching the channel. We appreciate it. Thank you for your service. Let's talk inflation really quick, because I think it's important. So today we got the CPI number out. So CPI on a month-over-month basis rose about 0.4%. On a year-over-year basis, inflation was up 7.7%. Even though that is horrible, right? We never want to see these big elevated numbers. It was better than many economists had estimated. So that's the headline number, which is not as important as the core CPI. which excludes volatile food and energy. So why is the core CPI more important to the headline? Well, I mean, many people pay attention to monetary policy, as they should, and Fed Chairman Jerome Powell and all the other Fed presidents take into consideration more so the core CPI, because they believe that food and energy are very, very volatile and should not be included in the inflation number. So core CPI also went up, but it didn't go up as much as analysts, economists on Wall Street had expected. So core CPI rose on a month-over-month basis of 0.3%. Year-over-year basis, it rose 6.3%. Now, here's something interesting. You know, I forgot to program the CPI report into the Nightbot, but I would highly, highly encourage everybody watching to go to the Bureau of Labor Statistics website and read through the CPI report, because it breaks down line item by line item the exact metrics that make up the CPI. And here's something interesting. I never really would have thought this, but medical care actually declined. So prices for medical care and medical services actually declined on a year-over-year basis. And I think the obvious one was used vehicle prices. So we've been talking about the used car market a lot. I think we have a little bit of a speculative bubble that has inflated over the course of the pandemic in the used car market specifically. If you look at a lot of those, I would say, online car auction sites like Vroom, I think is one of them, ticker symbol VRM. I mean, that thing has been pounded. You look at Carvana. Artificially low interest rates, and I know we talk about this a lot, but once COVID hit, the Federal Reserve put interest rates to zero, which encouraged everybody to take on massive, massive amounts of debt. So I think during the pandemic, you could buy used cars, you could get a loan, very, very cheap money, so people were doing it. But now that interest rates are going up, the demand for used vehicles are in steep, steep decline. You know, there's also some chatter specifically on Twitter. Now, I can't really confirm this is fact, but there is a notable Twitter account that it's a really interesting account. I forget the name of it. If you go to my Twitter page, I think I've retweeted him a bunch of times, but he actually is in charge of a lot of the repossessions for used vehicles. And he was showing a video of the lot, the repo lot, and it was my jaw was on the floor with just about how many cars were being repossessed. So I think you have a flood of inventory on the market. Used car prices are coming down. But the worst thing about this report, which is so horrible, and I don't know how we're going to fix this, but we need to fix it because it's an absolute existential crisis here in the United States, is shelter costs. I mean, we cannot get these things under control. Listen to this. Shelter costs are posted, or shelter costs, this CPI report posted their highest monthly gain since 1990. Shelter costs shot up 6.9% year over year, the highest annual level since 1982. Insane. So we do have food prices rolling over a little bit. We do have energy prices coming down slightly. However, energy prices did go up month over month, mainly because if you look at the price of crude oil this quarter, we're actually starting to go back up. Ticker symbol CL is the crude oil futures contract. I think we're trading at what, 88? I think we're right at the 50-day, $88, I think. Yeah, Julia M says it's disappointing and unfair. It's Hey, War Walker says I'll keep taking the bus, thanks. Yeah, I take the bus almost every day here in Miami-Dade. I haven't had a problem from it. Hey, BMST Group Inc. says it looks unreal. Everyone there has an Amex minimum or Chase Safari in their pocket, or Sapphire. Good to see you. Adura says, remembering the hurricane in Florida, a lot of the cars were flooded. That's another big issue. and they're definitely going to the resale garage. You know, I think I saw a post on that on Twitter. It's interesting you bring that up. So let me see who posted that. Hold on one second. Adura Henderson, great comment. So unfortunately, here in Florida, not here specifically, excuse me, but south of Tampa, Florida, I think Fort Myers area, was really, really impacted by Hurricane Ian. I mean, just horrible, horrible devastation. My heart goes out to everybody over there. Just terrible. I mean, I've been through Sandy, you know, my family and stuff like that, so I know how horrible the storm surge is. But the problem there is all of these cars, all of these vehicles were submerged in about 10 feet of salt water. And there was a lot of articles that have been coming out. And actually, the fire department in Fort Myers issued a statement that if you have an EV, right, like a Tesla or any other make or model, not to really pick on Teslas too much, but if you have an electric vehicle and it's in your garage and it was impacted or it got flooded during the storms from Hurricane Ian, you got to get it out of the garage because they've been catching fire, right? So I guess obviously salt water doesn't mix well with these lithium-ion batteries. So yeah, I mean, it's a good point. So a lot of those cars that were totaled are probably going to wind up on some lots and resold, unfortunately. This is, hey Tom, how are you doing? I'm doing really good. Really, really good. How are you? Style by Chrissy says, hey Tom, it looks like a Friday night. Well, I think it pretty much is Friday. Now, tomorrow is Veterans Day, and I think the vast majority of people do have off. I guess I'll ask the chat. How many people in the chat have off tomorrow for Veterans Day? Probably a lot of people, right? Sam is here. What's up, Sam? Good to see you. Austin City Limits, as Tom talked about the inflation, down 1%, 7.7% reported this week, down 8.7% last month. I think inflation has peaked. This is Austin City Limits. Yeah, I mean, so that is true. Inflation is rolling over, right? And I think, and we've talked about this, I'll sort of use the example that I use all the time. Real quick, I really want to go to this place. Looks like a really, really interesting, sort of like sushi bar. This place looks awesome. Looks very similar to a place we have in New York near Chelsea Piers. Anyway, so the example that I would use for this is sort of what we talk about a lot when it relates to the ISM PMI numbers. So the Institute, here's the Metro Mover going by. So the Institute for Supply Management, they release their Purchasing Managers Index, or their PMIs. And this really tracks the overall health and the growth of the manufacturing sector in the US economy. And it's not necessarily the reading that matters, in my opinion. It's the trajectory of those numbers. So to Austin City Limits' point, if we take a historical look back, and this is why, you know, if you're in finance, I would really, really get good at Excel and building, you know, types of models and things like that. So what I do is I plot the trajectory of the CPI. So the headline CPI number in June when we peaked was 9%. This looks like an interesting gelato place here. So the CPI in June was 9. And ever since then, we've been decelerating, I should say. So July, we had an 8.5% reading. August, we had an 8.2% reading. September, we matched that reading at 8.2%. And in August, we get a 7.7% reading. So it seems as if inflation is rolling over quite nicely here. Now, what I would say is that the core CPI is really the more important reading as it relates to the Federal Reserve setting monetary policy, right? So they like to look at the core CPI, which excludes volatile food and energy. And that has really been more sticky, I would say. Now, the biggest concern I have is with shelter costs. because if we think about shelter costs, it's 1/3 of the CPI. I think like 33% of the entire CPI report. And this was a big red spot today. And I don't think a lot of people caught that, because I think everybody's just looking at the headline number. Everybody was really excited that inflation is decelerating. But I think very few people actually go in and look at the report line item by line item. And it was a little bit disturbing. So shelter costs are up 6.9% year over year. That was the highest annual level since 1982. Food also did rise about 0.6% month over month and 10.9% year over year. I mean, think about that for a minute. Year over year, food increase is 10.9%. Insane. Estes says, I would ask Tom about what's the best coffee shop you ever visited in Manhattan. Best coffee shop I've ever visited in Manhattan. It's definitely a good question. I would have to say it's probably the one in NoHo. Black Press Coffee. Very good. Yeah, I would say that one. I got a quick question for the team here, and I need your input. Because sometimes, and here's sort of where I like to critique myself. Here's, I think, my biggest downfall as it relates to being an investor, a trader, whatever you want to call it. I sometimes tend to be too analytical and just numbers based. And I think the best piece of advice I've ever gotten is from one of my good friends who's quite well-known hedge fund manager in Chicago. He says it's good to look at the numbers, but it's also good to pick your head up out of the spreadsheet and go and talk to people, right? And what he meant by that is, you know, see what people are buying, see what people are experiencing in their everyday lives. So here's the question. We know that food prices are going gangbusters on paper, but have you guys been seeing in the stores a noticeable difference year over year from what you were paying for, let's say, meat or poultry or eggs on a year over year basis or a month over month basis? Would you say it's a big problem? Or would you say, it doesn't really impact me, I haven't really noticed? Or anything out of the ordinary that you would say, oh, I spent X amount of dollars on this last year, and this year it's just freaking crazy. What would you say? Julia M says yes, absolutely. Buy the books is only this year. Billy says yes, big time. BMST Group says inflation is falling. Yeah, you're right. Bob says yes. Zavi says most places are higher. Running at altitude says food has gone up like crazy. Bill Ryan says yes, major difference. Noodle says yes, prices are very high in the supermarket. Stacy still says, yeah. Hemi Power says you called it, this week is going to be wild. Yeah, I mean, we got elections, CPI, everything. Ben Robinson says groceries are very expensive in Singapore at the moment, as they are imported for the most part. So here's what I noticed. So over the past couple of days, I wanted to start cooking at home more. I mean, you guys know, especially if I'm in New York, right? It's very difficult. It's almost impossible. Well, I shouldn't say that. It's just I'm lazy. I'll just tell the truth. I'm not gonna BS. I just don't cook, right? But eating out every day in Manhattan could be expensive. I mean, you know, I've noticed some of the restaurants that I always used to go to for lunch, I would spend, you know, maybe $20 to $25, right? And you would get a lot of food. That same meal that I would go to from those restaurants I go to all the time in the city, it's now like a $35 to $40 thing. And now I start to notice it. I'm like, I can't do that. It's just not sustainable. $45 every day. And these are some local good spots, like some good Thai food restaurants that I used to go to in the city. So that's sort of what I've been noticing. Eating out has just gone freaking gangbusters. So I bought a couple steaks. I'm not really sure the prices of this because I never really food shop that much. So for 2 New York strip steaks at the Walmart Supercenter, I think it was $28. Now, would you say that is a ridiculous price, or is that an all right price? Michael is here, says, what will happen to FTX Arena? They're now, now that FTX has collapsed and Sam was a fraud. You know, Michael, I saw a hilarious meme, which I probably shouldn't be laughing at it. We'll go this way. I don't think we never really go down this way. We'll take a lap. I saw a meme on Twitter of the FTX Arena with the Spirit Halloween banner across, and I started crying laughing at it. I'm like, I probably shouldn't be laughing at that, but look, it was hilarious. Brad's brain says, Tom, you gotta cook. It's not healthy to be constantly be eating out. Yeah, I tend to get healthy options though. I would consider myself a very healthy eater, but I do understand what you're saying. It's definitely impossible. And I think that's why it's like $45 to eat out healthy, right? It's not like I go to the McDonald's where I could probably eat cheap. But no, you're 100% right, my friend. So yeah, we sort of talked about the FTX thing. Now, I think everybody who's been watching this channel for a long time sort of understands my position about the altcoins. And that is, you got to stay away from them, because essentially, in my opinion, these are all unlicensed, or I would say unregistered securities. And the problem with these exchanges that have their own token, and this is with any sort of cryptocurrency project, by the way. I mean, think about the mechanics of this. Here's how the economics work. You have a founder that has an idea for a product or a service. They issue a token, and they call it a token when it's really a security. And what they say is, we're going to sell all these tokens, and they use the proceeds to fund the business, right? To hire people. They use the proceeds to, hire software engineers, developers, things like that. But you can't do that. I mean, it's literally like you're just printing money out of thin air and soliciting unregistered and unlicensed securities. And that's the problem that I had with FTX. You know, they had their own token, I would say, which is named FTX. And that's another problem that I have with Binance. So I'm not sure if anybody's familiar with Binance. Now, they have their own token as well, BNB, and it's susceptible to the same type of, I would go as far as say ethics issue. That's what I would say. So once again, throughout history, right, and this happens over and over and over again in almost every type of financial calamity that has happened, it's the Securities and Exchange Commission totally asleep at the wheel, and the only time they'll wake up to do something about it is if a lot of people get ripped off. And now that tons of people lost billions of dollars, the SEC will probably finally come in here and just provide some regulatory clarity as it relates to cryptocurrencies. Hey, Ben Robinson, thank you so much, my friend, for the donation. I appreciate it. Says, hey, Tom, this is for weekend coffee and papers. Cheers, mate. Thank you for your insights. Hey, thank you for the donation. My friend Ben is very kind of you, and I appreciate it. Appreciate it a lot. Yeah, Deep Coder says Binance caused the whole thing. Yeah, they were dumping a lot of tokens, which essentially caused like a bank run, right? Like a panic. This is the same thing. I wouldn't say the exact same, but this is the same thing that happened with the Terra Luna scandal. It's all based on... Okay, here's how I think that you could sort of solve these problems. Number one, you got to regulate it, right? I don't think regulation is a bad thing as it relates to a lot of these altcoins, because if you had regulation, it's sort of like what the banks are held to account as well, right? They have specific lending protocols, lending procedures. They have strict requirements of capital requirements, how much cash these banks need to have on balance sheet, how much cash they can loan out at one time. And since there's no regulatory clarity or any regulation at all on these unlicensed and unregistered exchanges, it's pretty much just like a Wild West. You can do whatever you want, which is not good. So I think the SEC is going to come in here. They're going to provide regulation, but a day late and a dollar short is what I'd say. So this is the Metro Rail station. So the Metro Rail will take you all the way back through downtown Miami. It's actually a pretty nice view going on it as well. Barrington James is here. Good to see you. Welcome. Linwood Sly says, hey, Tom from San Antonio, Texas. Good to see you. Welcome, everybody from Texas. Mimi says, I am still skeptical on Bitcoin. We still don't know who Satoshi is. I think if we ever find out who Satoshi Nakamoto is, that will be the day I sell all my Bitcoin. Because here's the thing, and I think I've explained it before, but I'll explain it one more time. And this is another big issue that happened with FTX, right? Because the only value proposition that I see personally, right? This is from a personal standpoint. I'm not telling anybody how to think, how to believe. This is just my personal opinion on the cryptocurrency space and Bitcoin specifically. You know my take on altcoins. I think it's until the SEC can regulate these securities, I don't touch it. I don't participate, and look what's happening with it. A lot of fraud. Secondly, Bitcoin, the SEC has specifically stated it is not a security, it is property. So they give you clarity there. Now, the only value proposition that I see in Bitcoin, which has prompted me to allocate a portion of my net worth to it, and all I do is I just bring that portion back into alignment. So let's say if Bitcoin rallies 40%, well, my 1% weighting in Bitcoin is now probably going to be a 3% weighting in the portfolio. So you have to sell it down back to that 1% weighting, right? So as the asset price or Bitcoin falls, you have to add to the position in order to bring that allocation back to whatever you're comfortable with. So the only reason why, and I think I've said this before, that I own Bitcoin is because I like the idea that you can have truly a portion of your net worth that's unconfiscatable. Right? There's no government that could touch it. There's no hackers that could touch it. As long as you own your own private keys. Okay? So that means if you buy Bitcoin, you don't leave it on the exchanges. So big issue with the FTX crash is that all of these people who bought Bitcoin and leaving it on the exchanges, you don't own your private keys. You are subject to a custodian. So all of these exchanges like FTX, Coinbase, Gemini, they have custody over your Bitcoin. So if the exchange is ever hacked, right, sort of like what happened with Mt. Gox, you're out of luck, right? So the value proposition for me is like, why would I buy Bitcoin and leave it on the exchange? That defeats the purpose of the whole value proposition of unconfiscatable. What I want to do is I want to own it, put it in a paper wallet, write down my private keys, and put it in a safety deposit box so nobody knows it. And if the safety deposit box, let's say if there's a fire or something, the piece of paper vanishes, well, I memorize my private keys in my head, so theoretically I could move an unlimited amount of money across the world so long as I memorize those keys. But if you have it on the exchange, and God forbid the exchange gets hacked or something like that, well, you're out of luck. So not your keys, not your Bitcoin, as they say. Hey, Ryan Beck is here. Says cheers, all and Tom. Hope all is well. Good to see you, Ryan. Thank you for joining us tonight. Finally back on the stream after a couple days of crazy rain. Big Talks, Tommy, how are you doing? I'm doing good. I'm doing very good. No more rain in Miami, which is a big plus. Yeah, Deep Coder says Mt. Gox was 2013, very, very bad. Yeah, and here's the thing. I think that there's still people, now Deep Coder, you probably know about this a little bit more than I do, but I think there's still people right now that have still not recovered their funds from Mt. Gox. So what I think may happen with all of this FTX stuff, and not to make the stream all about FTX, but I think it's a very important topic to talk about. I think what may happen with FTX is they may go under, and anybody who had money on the exchange, let's say if you had $100,000 on the exchange, maybe a couple years down the line, you'll get, pennies on the dollar of your deposits. I think that's what may happen, which is horrible. And I hopefully nobody had any money with that institution, but. Let's head back over to downtown Miami. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you are new. We tend to do these live streams about 5 days a week between New York City and Miami. And we'd love to have you guys along for the ride. Hey, back to the stream after so long. I've missed it. Hello from India. Hey, welcome to all of our Indian viewers. Good to see you. It's LV Eddie. Thank you so much for the $1 donation. I appreciate you, Eddie. Thank you, sir. Greg says, Tom, but it's not tangible like jewelry or gold. Just a number representing an IOU. Yeah, you're right. You're exactly right. And I think that's what appeals to me, right? I know, sunshine after rain says, but Tom, that wasn't legal. It was 8 billion of people's money. It's crazy. Yeah, I mean, there's definitely going to be a ton of litigation around this, and it's horrible. And again, that's why I've said many times on the streams. And I really don't like saying it, because you'd be surprised at the emails I get. Very, very vicious emails. But I would stay away from all of these altcoins until the SEC regulates it, because it's just a big mess and it's a lot of fraud. But good to see all of our viewers in India. Thank you so much for joining. All right, so we'll do a quick recap of what I like to call the mechanics of the market, and then we'll move on to a major earnings report. So today, very, very big rip rally day on Wall Street, and I think we sort of had a few different factors culminating at the same time. And we already talked about many of them, but I think it's appropriate maybe just to do a quick recap. So number one, midterm elections are now almost in the rearview mirror, thank God. I think as of doing this video, if we talk about the House, the Republicans control 209 to Democrats 189. And the Senate, or seats in the Senate, I think Democrats have about 48 to the Republicans 49. So definitely not the red wave, the quote unquote red wave that everybody was expecting. Now, I think that's actually, looking back on it, I think it's actually was kind of obvious, because usually when there's consensus on something, usually the polar opposite happens. Usually if everybody's expecting a red wave, the polar opposite happens. And I was actually one of those people that was expecting a huge red wave. Now, the good news is, from a financial market standpoint, about 90% of the time after midterm elections, 12 months after midterms, the market is higher about 90% of the time. And that's because a lot of the fear, the uncertainty, and a lot of the doubt is now out of the market, because money managers or asset allocators, they're very hesitant to put money to work if you don't know if there's going to be new policy changes, new rules, regulations, or anything like that. So they sort of hold up until the uncertainty is through. Now, the second thing that I think is working for the market, and we talked about this almost ad nauseum now, is the weakness in the Dixie. So if we think about where the dollar or this Dixie topped out, it was at 114. And I think that high was on September 28th, 2022. The Dixie was at 114. Right now we're trading at 108. So the dollar strength is coming down, which is actually very, very good. If we think about Apple's earnings report, Tim Cook came on the earnings call and said that they had about 8% revenue growth in the quarter. It would have been double digits had it not been for a strong dollar. So the US dollar being strong accounted for about a 600 basis point dent to Apple's revenues. So if you think about the dollar coming down, if we think about going into Q4 earnings season, which is going to be in a couple months here at the end of the year, the markets are like, oh, it's pretty good. I mean, if you have Apple and all the major companies, a lot of the multinationals coming out here and specifically saying, I mean, it's almost in every call without fail, FX, foreign currency fluctuations, was a major headwind this quarter. You know, Apple to the tune of 600 basis points. So with the dollar coming down, while at the same time that 10-year US Treasury yield is also coming down. So 10-year US Treasury yield fell all the way from 4.332% to about 3.811%. You know, let's actually go up the stairs, and I think we're going to take the Metro Mover across, just because I think it'll be a little bit quicker. So that's sort of the dichotomy we have. Lower dollar or weaker dollar, which is stock market positive in this environment. We have yields coming down, which is stock market positive in this environment, and also the VIX. We had a massive move in the VIX, so the CBOE volatility index, crashing all the way down from 34 to, I think today it closed at 23, maybe 24, something like that. Yeah, I think this is the right way. So I think that's the combination here, everybody. I think a lot of the earnings have now passed. A lot of the mega cap tech stocks. We're at the tail end of earnings season. It was an okay, meh earnings season. It wasn't great. So I think we have the tailwinds of a strong dollar. We have the tailwinds of the bond market finally getting a bid. Oh, that's what I wanted to talk about. So take a look at this. Take a look at ticker symbol TLT. TLT. So sometimes, and I don't think I've talked about this in a long time on the live stream, but there's something that I like to set up sometimes called a pain trade. So PANE trade. And if you look at something like the TLT or the bond market in general, where do you think the pain trade is to? Do you think the pain trade is to the upside or the downside? And I tweeted about this today. So if you follow me on Twitter, at Walks Wall Street, I posted a chart of the TLT. It's been absolutely getting obliterated. Because if we think about the relationship between bond prices and bond yields, as bonds sell off, yields spike. And as bonds get bought up, or as investors buy bonds, or the Fed buys bonds, yields start to drop. And that's exactly what we've been seeing. So look at a monthly chart of TLT. It's the most ridiculous thing you'll ever see in your life. And tell me, do you think the pain trade is to the upside or the downside? I think it's to the upside. So let's just say that. Mimi says, I think TLT may go lower. Maybe. Possibly. You know, I noticed they have all the Christmas stuff up here in the Brickell City Center once again. Kevin Ramsey is here. Says, welcome back, Tom, and everybody. Thank you so much. Joseph Hardaway says, Tom, did you send the newsletter? I did not, but I will be sending it by Sunday. I was sort of panic scrambling because we had the hurricane coming, which wound up never even reaching us. So I had to take a little bit of a hiatus, but it will be out by Sunday. I'm almost finished with it. But thank you so much. Ryan Beck says, I think there was extra gunpowder on top of that. It was getting higher CPI that also helped squeeze in the morning. Yeah, I think a lot of people were net short the market. And I think a lot of these tech stocks specifically were really, really extended to the downside. So usually when you have any stock that's extended more than 10% to the downside from its 50-day moving average, you usually have some sort of a mean reversion trade where the stocks rally back to their major moving averages. Does anybody remember we were talking about a company called 3M? Now, if you think all the way back to our New York City live streams, I was talking about ticker symbol MMM. And I said, look, the stock is getting hammered, right? Absolutely obliterated due to some unfavorable news revolving the massive amount of litigation as it relates to their earplug unit. I guess their earplugs were negatively impacting soldiers, veterans, causing hearing loss. And there's been massive, massive litigation. I think now that subsidiary is bankrupt. So if you go to my Twitter, take a look at the chart I posted on a monthly time frame of ticker symbol MMM. I posted this about maybe 3 weeks ago. And there was so much volume. I think there was about 300% of average daily volume coming out of this thing. And I'm like, this is definitely the bottom for this stock. That's how markets bottom, on that type of capitulation there. I think the stock has rallied like 40% since I posted that. Keep an eye on that. Also keep an eye on Caterpillar, ticker symbol CAT, coming off a pretty decent quarter. Now, this isn't a suggestion to buy anything, by the way. This is just a basic open conversation about the general markets. I just think it's interesting, these particular two movements in Caterpillar, ticker symbol CAT, and then the 3M company, ticker symbol MMM. Hey, Sabrina Fair says, happy Thursday evening. Happy Thursday evening to you too. Thanks for being here. No, Tom G, I think the main litigation there is actually for the earplugs. I think the earplugs were negatively impacting the military members. Anyway, so last thing that is on the list here that I wanted to quickly talk about as it relates to the housing market. So D.R. Horton actually reported earnings, I think about 2 days ago now, or maybe it was yesterday. Now, ticker symbol DHI, they are the largest home builder in the United States by volume. So it's very, very important when these type of companies report that we are all ears. Now, I think Realty by Lance, which is is a realtor here in the South Florida market, sent me a message about this particular company to take a look at. So we will take a look at it here on the stream. So earnings per share came in at $4.67 on the back of $9.64 billion in revenue. Even though that was up materially year over year, it did miss Wall Street expectations of $5.07 of EPS on $9.87 billion in revenue. So a slight miss there on both the top and the bottom line. But I would like to give you guys a little bit of homework, and I think it's very important, especially in the interest rate environment that we're in. So if you think about the massive moves that we had in the bond market, Oh, check out this view. I don't think we've ever seen this before. I think this is the tallest residential apartment building in all Miami, Florida, right here. The Panorama Tower. It's looking great tonight. And then as we shift the camera over here, you'll actually be able to see the Bank of America Tower. Anyway, so what I would like everybody to do, oh, this side you could actually see the Paramount building too. What I'd like everybody to do is go to DR Horton's investor relations page. Now, I probably should have dropped the link to the earnings conference call in the chat, but I forgot, as I tend to usually do. I tend to forget. So listen to the earnings call. It's a 40-minute call, and I think you guys are getting a lot of value out of it, especially now that mortgage rates are over 7%. I think I'm going the right way here. Yeah, we are. Here we go. So I want to read a couple quotes that caught my attention from the earnings call. Hold that thought. I think this is our train, my friends.
Please stand clear of the doors.
All right, hold that thought because
this train will depart momentarily. Please stand clear of the doors.
We have to get on the metro.
The train is being delayed.
Oh, I think we're delayed.
The next stop is 5th Street Station.
All right, hold that thought. We'll cover this once we get off.
Please hold on. The train is approaching. 5th Street Station.
Hey, Mike C, what's up? All right, we got a couple more stops.
This is 5th Street Station. Please stand clear of the door and hold the handrails.
So you can actually see the metro rail all the way in the back. So all the way in the back, lit up with the rainbow colors. It's the metro rail. Check out the view from the metro movie though.
Please hold on. The train is approaching. Riverwalk Station.
Hey Jose, this is Hey Tom from Brazil. What's up, Jose? Yeah, Austin City Limits. I am rocking the glasses lately, not the contacts. You know, let's get off at Riverwalk Station because I think this is one of the highest stations there are. Now check out this view here of the Miami, or the City National Bank building, Miami Tower. Crazy view here. So City National Bank is adjacent from the Wells Fargo building. Now I think Wells Fargo is probably going to be one of those banks that's going to be in the most trouble here. And I'm not talking about, you know, from a stance of like a existential financial crisis, but Wells Fargo tends to have a lot of exposure to the mortgage market. And if you think about refinancing, people who are interested in refinancing their mortgage, well, it's pretty much nobody. So that business has gone to zero pretty much overnight. Wow, so this is one of my favorite buildings in Miami, actually. It is the W Hotel and Tower. You have an amazing, amazing view of all of Brickell City Center.
The train to Financial District is arriving. Stand back from the platform edge.
But if you look all the way in the distance here, this is actually a soccer field on top of the building. I'd actually like to play soccer there someday. Give you guys one quick view and then we will cover the topics that we need. So this is where we actually just came from. So just for some perspective across the river here. This is Brickell City Center. You have the WeWork building where we started the stream, the SLS Lux building. So this is what they call the mini Manhattan here. And now we are on the other side of downtown Miami, where we are going to be walking right over here near the W building, Hotel and Tower. So this is the Metro Mover that will take you all the way across. Yeah, Carson says, hey Tom, you ready for the World Cup? I am, man. You know what's sad? I was talking to my friend about this not too long ago. I had no idea the World Cup was this year, and I used to be a huge soccer fan. I played soccer in college, and it seems like ever since the pandemic happened, I've just gone totally dark on sports.
For your safety,
so,
stand back from the platform.
But I definitely will be watching the World Cup. Definitely. All right, one more view of the Miami Tower, City National Bank, and then we'll cover this earnings report here. And then all the way in the distance, this is the Paramount Tower. I think this is the residential apartment building that has the most amenities, I think, in the entire United States. So here's an interesting quote I want to read from the earnings report. So we're talking about D.R. Horton, ticker symbol DHI. It is the largest home builder in the United States by volume. They missed earnings on both the top and the bottom line, but I actually think it was a pretty good report given the circumstances. So this is what the CFO said, and I quote. It says, we expect our average sale price and average gross margin to decline materially in 2023, mainly due to higher mortgage rates. Now, one of the things they also talked about on the call is trying to reduce the costs for building homes. One of the things that they're seeing, which a lot of these single-family home builders are also seeing, is customers backing out of contracts, right? So if you were thinking about buying a home when interest rates were 3.5%, probably that same home is not in your budget, upwards of 7%. I think we're at, what is the average 30-year fixed rate mortgage going for right now? Probably, it's actually come down a little bit now that we had a big move in that 10-year US Treasury, but I think it's probably still about 7.2, 7.3%. All right, let's continue to walk down here. I don't think we've ever been to this station. So that's going to impact earnings, right? What have we been talking about all earnings season, especially as it relates to tech stocks? Look for margin compression. And I think the home builders are going to have a real tough go about it next year, especially if interest rates stay elevated. So an analyst on the call, I forget where the analyst was from, it may have been Evercore, but he gets on the call and he asks a question. And he says, do you think you're going to see unusually high volumes of customer cancellations as it relates to contract cancellations? And I think it was the CFO was on the call, and he said, I think we're going to have a big impact to the business. Oh, check out all these cell towers down here. He says, I think we're going to have a pretty substantial impact to the business if interest rates continue to go up. And what I like to do to sort of corroborate the data is by looking at both the existing home sales numbers and the new home sales data. So we are posed to hear again from the National Association of Realtors as they released their existing home sales data. And every single month so far, feels like I'm going down 1,000 flight of stairs. I'm getting dizzy. As they release their existing home sales data, and every single month so far, we've had deceleration in transaction volume, okay? Just like today, we covered the inflation report to the CPI. Now, one of the things that we look for is the trajectory, right? So I always say it's more along the lines of trajectory than the actual number. So inflation has been decelerating, but also as it relates to the housing market, if we look at the National Association of Realtors, sales transactions, existing home sales are decelerating. New home sales are decelerating. So for companies like single family home builders, they're really starting to manage their inventory. And the word inventory was probably used over 60 times on the earnings call of D.R. Horton. Again, I would highly suggest you going to the investor relations page and spending 45 minutes listening to the earnings conference call, because you are going to get a live look at the health and the demand sector of the housing market. So pretty good quarter overall, but you are seeing demand decline quite substantially. Hey, Maria's here. It's a beautiful night there. Good to see you, Maria. Welcome. Dusty Cole, the one and only Zozo Bob. Ryan Bex, for some reason, I'm less stressed when you're walking in New York City, even though it's more hectic. Miami is a bunch of crazies. Well, the reason why I'm not concerned is because I'm also one of those crazies. So it's sort of like, crazy and a crazy, they cancel each other out. Nicholas Durra says, hey, Tom, which state do you live in, New York or Florida? I live in both. I live in New York and Florida. We just gotta cross the street here. This is gonna take us up and under the hotel and back to the 200 Southeast Financial Center. So speaking of midterms, we do have our governors. So here in the state of Florida, we re-elected Governor Ron DeSantis. So congratulations to Ron DeSantis on winning re-election. And in New York, we have Kathy Hochul, which won the election. So congratulations to Kathy Hochul as well. I wish both candidates the best, and hopefully they have massive success in their two states, because I live in those two states. So even though I may not agree with the politics of one candidate or the other, look, they were elected. That's the election results. And I support it. And I'm ready to rock. Jimmy says, hey, Tom, what is the stream setup? So we usually stream on an iPhone 13 mini. And I just use a basic gimbal. I think I got it off Amazon. I think for about 50 bucks. So here we are at the Hyatt Regency, everybody. Now, I think they just got approval to build a completely new hotel on the grounds here. And I think in a couple of years, this thing is gonna look insane. I'll take you guys over to the Aston Martin building as well. All right, let's go down here. So we are outside the Wells Fargo building. So now we're on the other side. So this is the drawbridge that goes up. Maybe I'll show you guys halfway over the drawbridge. But we will cross over to the left here. All right, so let's do a quick poll. I wanted to do this. I wrote this down. I'm glad I didn't forget. I want everybody's predictions. So from today's close, okay, we had a rip rally day on Wall Street. All the major equity indices were up, I think, over 4%. I think the NASDAQ was up over 7% today. So if we had to put a guess in the chat, by December 31st, from today's close, okay, do we think the S&P is going to be higher, lower, or unchanged? Now, there's a reason why I'm doing this poll, by the way. But the interesting thing is, you guys aren't going to find out why I'm doing this poll until New Year's Eve. So it's going to be interesting. So what do you guys think? From today's close, do we think the S&P by New Year's Eve is going to be higher, lower, or unchanged? So Rachel Labreus is lower, Tweeties is unchanged, Zozo Bobs is higher, Nicholas Duras is, I guess, higher, Deep Coders is higher. Okay, so it seems like a lot of people say higher. Austin City Limits is higher for sure. Jimmy Inspire, good to see you. Tracy Sills is slightly higher to unchanged. Bree Johnson says, let's be positive and say higher. I like that attitude 100%. So what I will be doing is I'm going to go back and I'm going to make an Excel spreadsheet of the stream. And I'm going to record all of the predictions. And New Year's Eve, you'll find out why I'm doing it. I think it's going to be cool. Hey, Design Ideas says amazing color buildings, and thank you for the $5 donation. Yeah, I mean, the City National Bank building looks crazy. This is Miami Tower. What's even more crazy, so keep in mind the color scheme. Thank you so much for the donation, by the way, Design Ideas. Appreciate it. So keep in mind the color scheme of the City National Bank building. And the Aston Martin building, which is right here. So the one right in front of us, all the way up. Supposedly, this building is going to be the same exact color of the Miami Tower City National Bank building. It'll be able to change color. It'll be able to light up, which is almost going to look unreal. Now, I'm not sure if that's true, but I read that in an article, so hopefully that's the case. 2 Explorers videos is slightly higher. All right, so it seems we have consensus here that by the end of the year, the viewers of Walks in Wall Street thinks the market is going to be higher. I think it's almost consensus, which is getting me a little bit nervous, but I have to keep reminding myself that this isn't Main Street here. The viewers of Walks in Wall Street, everybody watching the stream is smarter than the average individual. You guys are more talented. You guys are even better looking. You guys are fantastic. So we have a smarter than average crowd here. So I think we may be right. We'll see. But I'm going to make a chart, and at the end of the year, I think it's going to be quite interesting. You guys will see what I'm going to do. I'm going to do a couple Excel tricks here. All right, quickly I'll show you the Epic Hotel and Tower, which is also another great building. Man, but the Aston Martin building looks fantastic. Hey, Jason Francis says hello, Tom and chat. Good to see you. Good to see you too. And happy Veterans Day Eve. So let's talk inventory for a bit. I also wrote this down. So in the earnings report of D.R. Horton, it says as of September 30th, 2022, so the conclusion of Q3, excuse me, the company had 46,400 homes in inventory. 27,200 were unsold. And 4,400 of those unsold homes were completed. And if I could take away probably two things from that earnings call, it was number one, reduce costs. So they must have came up a million times that management is trying to negotiate with their suppliers, right, to reduce construction costs, because commodities have actually materially come down. So to offset the issue of rising interest rates that is forcing a lot of their customers to back out of these deals, they're trying to reduce the costs of building these homes to maybe cushion the impact of a lot of the gross margin hit that they may be able to take. But number two was managing inventory. They're like, look, we know the economic uncertainty coming up. We know that there's a lot of talk of a recession. We see on the horizon a lot of layoffs. They actually mentioned a lot of the technology layoffs on the earnings call, probably because they're selling to individuals, right? And if people are getting laid off, probably not in the market to buy a house. So they said we actually registered a near record low in new construction builds, which could be a good thing or a bad thing. Now, it's a bad thing as it relates to inventory, right? Because if you're looking to buy a home, oh, check this out. So they removed all of the nonsense here, all the construction, and they're actually just starting construction on the new Miami Riverwalk. So I'll give you a quick view. So all the way down here, this is Brickell Key on the other side, by the way. But this walking path goes all the way around downtown Miami. And due to the fact that they were building the Aston Martin building, this was all blocked off, but they're actually going to start building the other side of the Riverwalk, which is great. This is going to look fantastic when it's done. Now, supposedly, if you buy a unit in the Aston Martin building, it also comes with a car. I'll try to give you guys an up close and personal view of the construction site. Man, that looks awesome. So this whole area right here is going to be the brand new Miami Riverwalk. And this is right in front of the brand new Aston Martin building. Insane. Now, I wish we could do these live streams during the day, because let me tell you, downtown Miami and Brickell look like completely different cities during the day. It's almost crazy to think about. Now, this is Brickell Key. Now, the good thing about Brickell Key is it's excluded, very, very isolated from downtown Miami as well as Brickell. But the bad news is it's very excluded and isolated from downtown. But I think I've taken you guys over there once or twice. It's absolutely beautiful, very quiet, and the views are amazing. Ooh, I think we got some heat lightning over here. Hey, Gary Carpenter, good to see you. Steph UF says would love to see it in the daytime. Hey, Steph, how did you hold up during the hurricane? I think you said you were in the Orlando area. I completely missed us. Whoa, did you guys see that? 10 out of 10 on the lightning strike there. Let's see if we get another one. ATC, says Tom, do one in the day. It's hard. I work during the day. It's tough. I'll probably have to try it on a weekend. So the last thing I'll say about DR Horton's earnings report is earnings overall were actually solid. You know, I was expecting them to come on the call and say that they're having waves and waves of contract cancellations, but it's not as bad as you would think. Now, the only bad news that I think for buyers that is happening right now is these companies are actually being quite responsible and being proactive in managing inventory. They're not over levered. So if they're underbuilding and we have a Fed pivot and interest rates go back down, well, I think the prices of housing, prices of homes could absolutely skyrocket, but I don't think that's going to happen. I think I've said my position many, many times before. I think the Fed is going to be extremely, extremely steadfast with raising interest rates. Now, the overall topic, for those of you who are just joining, we covered in depth the CPI report. Okay, so CPI, that headline number came in at 7.7%, which is decelerated now since June. However, here was the big issue in the CPI report in my eyes. It was shelter costs. So shelter costs, which makes up about a third of the CPI, actually went up at its fastest pace ever since 1982, excuse me. And I think we need to get that under control. And even though that the CPI numbers decelerated, I think Fed Chair Jerome Powell and a lot of the other Fed presidents, the central bank, are going to look at this and say, okay, interest rates need to continue to go up. Now, if you look at the futures market, futures traders are right now pricing in an 80% probability of a 50 basis point rate hike. Okay, about a 80% probability of a 50 basis point rate hike. That is higher than the 58% that they were pricing in before the CPI report came out. So that is less than the 75 basis point rate hike, which we got for the fourth consecutive time. But even though that we're probably going to raise rates in lesser increments, the duration is probably going to be longer than anticipated. And the reason why we know this is because at the last FOMC meeting, when Fed Chair Jerome Powell raised rates about 75 basis points, he said exactly that. He said, even though we may have less and less in the quantity of the rate hike, the duration is going to be a lot longer than we anticipated. So that should probably bring the Fed funds rate to right around 5.25, maybe 5.5 by spring. Right now, this is the 200 Southeast Financial Center, which on the 20th floor of this building is the temporary offices of Citadel Securities. And Citadel Securities is a major, very, very successful quantitative hedge fund and market maker on Wall Street. Now, I forgot to tell you guys, one of the reasons why I could not do the live stream about 2 days ago, I actually had the great pleasure of being able to meet Ken Griffin live, as well as the mayor of Miami, right here in downtown Miami at the Miami-Dade College campus. He did a keynote sort of conversation with Mayor Francis Suarez, talking about the future of Miami, talking about the future of Citadel Securities, and also a little bit of global macro talk, which was a great event. I actually got to meet some employees of Citadel Securities, do some networking, which was fantastic. And I think the overarching takeaway from that conversation is two things. One from the political side of the house, and one from, hold on, let me just cross. And one from the economic side of the house. Now, I'll say the economic side of the house first. What I will say is, if you want to read a recap of that conversation of Ken Griffin, the CEO of Citadel Securities, I will be writing about it in my Behind the Street newsletter. So if you want to scan the QR code on your screen, please scan it. If you punch in your email, you will be signed up for free to receive the Behind the Street newsletter, which is a free financial newsletter that I write for the group where we cover US equity markets, emerging markets, fixed income, real estate, and also a little bit of crypto. We'll be covering that. But I will be writing about it, so scan the QR code and punch in your email. It's completely free. So 2 things. Number 1, let's talk about the economic side of the house. So inflation was a huge conversation. And Ken Griffin is essentially agreeing with everything we've been talking about on this live stream. You know, why is inflation so ingrained in the economy? How long do you think it's going to take for inflation to come down in the United States? And essentially Ken Griffin's answer was, you can't expect to print trillions and trillions of dollars to do unprecedented monetary and fiscal stimulus and expect not to have a big inflationary event, right? So many people, in my view, and this is why, you know, although I agree with the Federal Reserve raising interest rates, I don't think that's the full piece here, okay? If you really want to bring down inflation, you have to shrink the money supply. Hey, they took down the American flag. What the heck? Maybe they're putting up a bigger one for Veterans Day. But anyway, so Ken Griffin is essentially saying, look, his biggest problem with the Fed is that they didn't raise rates fast enough, and they made a bad call by saying that inflation was transitory. Does anybody remember that? When we first started having these huge inflation prints, the Federal Reserve, Fed Chair Jerome Powell were floated out, and they're like, don't worry, it's going to be transitory. It's just going to come down. It's only going to last a month. Yeah, well, a year and a half later and 9% inflation later, it hasn't really been transitory. So big Fed miss there. The Fed, although they are raising rates now, they should have done it way long back. One of the other things that Ken Griffin criticized is not only Fed policy in 2020, but going all the way back from the emergence of the financial crisis, right? We are coming out of a monetary experiment. We are coming off about over a decade of artificially suppressed rates and a unprecedented expansion of the Fed balance sheet. Okay, so everything we pretty much talked about on the stream, it's essentially consensus with what Ken Griffin, CEO of Citadel Securities, said. He's like, look, we can't expect to print all this money and expect no inflation, because at the end of the day, money velocity is going to pick up. And money velocity is the rate at which cash is funneling through the economy. And if you print a bunch of money and lock everybody down, well, when you reopen the economy, now everybody wants to go out and spend all of these newly printed dollars on all of these too few goods. Okay, so you had the worst scenario ever for inflation. And what he was talking about, as he says, too few goods, he's like, look, you printed all this money to stimulate the economy, but at the same time of locking down the economy, there were no people to produce all of these goods. So what did we talk about on this stream for about a year now? Supply chain issues, global semiconductor shortages in commodities. So you had all of these newly printed dollars funneling around the economy as people started to go out, as lockdowns started to come off. You still had severe supply chain damage. So not only did the money supply increase, but you had too few goods and people chasing these too few goods with these freshly printed dollars. So I think he gave a great explanation there. Now, what he said on the political side of the house was this, because obviously the mayor of Miami, Mayor Francis Suarez, which I tend to like a lot, I think he wanted just to ask a question just to maybe take some credit, which, look, all credit to him. He's attracting some great entrepreneurs to the city. But I will say this. Ken Griffin said, and I know you guys are probably going to get a little bit riled up here. He said the decision to bring Citadel Securities to Florida, to Miami specifically, did not involve lower taxes. I know what you're thinking. BS. You call BS. And look, I may call BS too, but here's the thing at the end of the day that he said, which is so strange, because I've been saying the same thing. It was very strange listening to it, because I'm like, when I do these live streams, I've actually said this same thing. Because many of you have asked me, well, Tom, why'd you go to Florida? For lower taxes? I'm like, not really, man, not really. I mean, you guys know that I tend to lean on the conservative side. I'm very open about that, right? I tend to be a conservative. I like low taxes. I like freedom. But at the end of the day, I actually think I'm a little bit different. I guess you can consider me, the Gen Z millennial category. I have no problem with paying high taxes. It's the representation of those tax dollars. And what Ken Griffin was sort of explaining is the same thing. He's like, with the former mayor of Chicago, we were making great headwinds with reducing crime. Ken Griffin invested billions upon billions of dollars into educational programs in Chicago, into reforms of the justice system in Chicago. And he's like, we were making such great headwinds. But once the newly elected mayor of Chicago took over, he's like, all of the invested money, all of the invested time started to unwind, and crime went up. And I don't want to be in a position where we're spending all this money on taxes but not getting represented. And I think that's the same way how I feel. I actually don't mind, having 50% of my salary being taken away to taxes, which I had my entire working life in New York City, if the streets are going to be safe, if the streets are going to be clean, if the subways are going to operate on time, right? I really have no problem. But when you start to see a degradation of society, when you're paying the highest taxes in the nation, it kind of seems a little bit unfair. And this was his sort of way of holding those particular politicians accountable. Now, again, these are his words, not mine. And we're going to do sort of a recap of a little bit more that went on during that talk. But those were the main two things. So number one, they talked about inflation, a little bit of global macro. And number two, what was the decision to come to Miami? And in his words, it wasn't necessarily because of the low taxes. It was the very, very seamless business environment. One of the things that Ken Griffin said, and I think I got to hurry this up because my phone may die. One of the things that Ken Griffin also said, he said, the first time that I came down to Miami and met with the mayor of Miami, Francis Suarez, he said, the one thing that was so crazy to me is he opened up his laptop, and he's saying this about the mayor of Miami. He said he opened up the laptop, pulled up Google Maps, and the first thing he started talking about to the Citadel executives, he's like, oh, I think you guys could build a nice office space here. I think, your employees could live in all these buildings around. This is where you could break ground for your office space on day one, right? So from being in Chicago and seeing all the bureaucracy and all the red tape, then from coming to Miami and seeing just how hungry they were for the business is sort of what closed the deal. So I thought that was interesting too. I mean, at the end of the day, if you are an elected official, you also have to have that sales acumen, that go-getter mentality to attract businesses, to attract entrepreneurs to your city. And, according to Ken Griffin, it seems like Mayor Francis Suarez is doing a pretty good job. But team, I do want to apologize because I do have to get my bus right over there. I want to wish everybody, I think this is the biggest, most important part of the stream. Tomorrow is Veterans Day. So thank you to all of our veterans. I take it very, very seriously here on the Walks from Wall Street channel. We support our men and women in the armed forces, both past and present. So I want to say thank you, thank you, thank you. Without you guys, we wouldn't have a great country, wouldn't have a great city. We wouldn't have the Walks on Wall Street live stream. So thank you, everybody. Have a great Veterans Day. The stock market will be trading. The bond market, fixed income market will be closed. We'll see you tomorrow at 8:30. If you guys want to sign up for the newsletter, it is right there on the right-hand corner of your screen. Steve, CR, thank you so much. 2 Video Explorers. Latha, thank you so much. Kevin Ramsey, Abdullah, Said TV, Dusty Cole, Joan Ryan Beck, the LT Prod, Nicholas Dura, Zozo Bob, Wendy England, Ryan Royal, Ryan Beck, and to all of our deep coders, is Tom is a Bitcoin maxi. I guess you could say that. Steph UF, take it easy. Sally, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. If you enjoyed the live stream, feel free to hit the like button and hit the subscribe button if you're new. We'll see you tomorrow. Peace.